Hello, advisors. Wishing all investors a wonderful and relaxing weekend. First of all, let me briefly talk about the three major indexes in the current overall market: the Dow Jones, S&P 500, and Nasdaq. All three have recently shown a very nice upward movement. Personally, I believe a slight pullback in these indexes at this level would actually be healthy, as it would create attractive buy opportunities for individual stocks. It would also help us see which stocks are maintaining strong trends, allowing us to better balance our investment portfolios. By the way, in this video I'll also be highlighting various buy points, which may differ from the strategies of other professionals. That's because every institution has its own investment style and target for price increases. Therefore, individual investors should also be flexible in identifying the right entry points for their own portfolios. Alright, no more small talk, let's get into our main topic. Previously, we looked at Google stock. At its current price level, I personally believe it's not ready to break out just yet. Even if the stock does push higher, it's likely to pull back again. That's why I think the $177.6 price range is a good area to accumulate shares. However, I would caution against chasing the stock if the price is pushed up to high. If the stock reverses and closes around the $170 mark, those who bought at $177.6 should consider selling their entire position rather than holding to avoid getting stuck in a consolidation phase. At that point, we'll look for better investment opportunities in other companies that could outperform your current portfolio. Next, let's take a look at the RTX stock. This stock is showing a very strong uptrend. In fact, it's performing even better than the overall market. Major institutions have been supporting the stock price and pushing it higher effectively. From my perspective, RTX has already built a solid base, and there's a high likelihood of another price push coming. However, in the short term, the stock needs to consolidate around this range before we can confirm whether there will be another breakout. At the moment, supply and demand haven't been fully tested, so it's important to give the stock more time. That said, we can consider buying around the $141.2 level. However, if the stock doesn't follow the expected trend and closes the day at $138.3 or lower, we should immediately sell and not hold on to the position. Next, let's take a look at SICK stock. When we examine the daily chart, we can see that the stock has been consolidating beautifully at the current price range. Because of that, retail investors like us should carefully monitor the stock's reaction in this area. For this ticker, we can consider placing a buy order in advance around the $388.5 level. A quick overview. SICK is showing a strong trend with a solid consolidation base, maintaining excellent price stability. The institutional buying pressure is also very well structured. From my personal perspective, this stock is an excellent candidate worth keeping a close eye on for potential entry opportunities. That said, analysis is always about probabilities. So if the stock closes the day at $380.2, we should immediately exit the position. This stock checks all the key boxes, so we should dedicate time to watching it closely and not miss out on the opportunity it may present. Next, let's move on to Avgo stock. Looking at the chart, we can see that the stock has maintained a strong price channel trend, with particularly strong momentum pushing the price higher. For stocks with a well-defined trend channel like this, I personally believe there's still potential for further upside. However, at the current stage, the stock likely needs to enter a consolidation phase to retest supply and demand. During this period, we can closely monitor price action and consider placing buy orders around the $263.1 level. In the event that Avgo fails to hold its trend channel and begins to reverse, especially if it closes the day at $249.2, we should seriously consider exiting the position for the safety of our portfolio and continue observing the stock's behavior. My personal principle is this: if a stock breaks its trend channel, we sell immediately regardless of whether the loss is small or large. Since we didn't accumulate the stock earlier at lower price zones, we must exit as soon as the trend is violated. If the stock continues to show positive signals and controlled volatility within its consolidation zone, we can hold the position with the expectation of continued growth. Trend-following investment strategies like this one require strict discipline in order to preserve capital. Personally, I believe that a stock maintaining a strong trend is unlikely to experience a deep correction, so investors shouldn't be overly concerned in that regard. Next, let's take a look at Bitcoin. Based on the chart, we can see that Bitcoin has not violated its price channel, so those who entered from lower price levels can still expect a potential upward move. At the moment, Bitcoin needs more time to consolidate. If it can hold the current price zone, there's a strong possibility of a breakout that could lead to significant growth. On the other hand, if Bitcoin pulls back and drops to around the $105,600 level and the daily candle fails to show a solid rebound, no lower wick or weak recovery, then it may require a much longer period of reaccumulation before any meaningful rally can resume. Therefore, investors should pay close attention to how Bitcoin behaves around its current price zone. As for opening new positions, I personally wouldn't recommend it at this stage. However, for those who already hold positions from lower levels, it's worth continuing to hold, since Bitcoin hasn't violated any key technical signals that would indicate a bearish reversal. In short, this is a time to hold and closely monitor Bitcoin's trend development. Next, let's move on to Ethereum ETH. Based on the chart, I believe ETH is showing a similar pattern to Bitcoin. Therefore, for those who entered at lower levels within the price channel, it's best to continue holding. Currently, ETH has not broken its trend channel, which remains a strong technical signal for existing holders. If ETH continues to consolidate sideways at the current price range, that would be a very positive setup for a potential next leg up. On the other hand, if the daily candle closes around the $2,370 level without showing any wick or sign of recovery, then it may be wise to exit the position and wait for the market's next move. I sincerely hope all investors are able to find strong entry points for their portfolios, especially those who managed to enter at advantageous prices and positions that allow them to comfortably hold for the long term. Lastly, I'd like to issue a disclaimer. All of the recommendations and comments in this video are strictly my personal opinions. You are solely responsible for your own investment decisions, including when to buy and when to sell. I will not be held accountable for your outcomes, so please think carefully before placing any trades. Wishing all investors good health, sharp judgment, and success in finding stocks or assets with strong trends. See you in the next video.